Hello everyone, Kenneth Amanderi here with CrushTheStreet.com. You know, I don't really do this. I've never done this actually. I think I've addressed you guys in this format, in a podcast sort of format, but I wanted to just kind of connect with you guys a little differently today, and I'll still do the email, I'll still do the article, and do that for the people who aren't necessarily going to click on the videos, and who just kind of like the emails for what they are. But I wanted to just address a couple things. I had a couple things on my mind that I wanted to talk about, and just it really came about with looking at the markets and just the new year in general. Now, last year, if you followed me for some time, I talked about the new year being 2013, and in end of 2012, we were seeing a lot of debt crisis issues and debt ceiling and all this stuff relating to government cuts. And it was putting pressure on the stock market, and the stocks would react different ways, and whether or not we were going to see more QE and all these different things. And it got to the point where we got to January, and January brings around newness and new resolutions, and business start to plan for the new year and to go forward. And basically, I just felt it. I felt it that we've heard enough government problems. We've heard about the debt ceiling. We've heard about government cuts. And basically, we've heard a lot of noise that never really seemed to come down and affect people and individuals down to their level, because we would hear throughout 2012, oh, we're going to hit the debt ceiling, and then they raise it, and then nothing happens. We kind of go through like it was just a number. Then it comes again. Oh, we're hitting a debt ceiling. We're getting to our spending limits, and our spending's out of control. And then we kind of deal with that news, and then we kind of went through it. So the end of 2012 came, people are in the holiday season and kind of forgetting about the stock market, and the new year came around, and I sensed, because of that the market would just kind of release a lot of those things. We'd kind of, we'd have a resolution to the debt problem, the latest one that they were talking about, and the burden would be lifted, and the new money would pour in, and 2013, in fact, was a year of big returns for the stock market. It was, I think now, about 30% up year over year. Big year. If you were in it, you made some good money, and I talked about that. If you looked at some of my January articles, you can see that we were talking about a good year for the stock market. And here we are, a year later, in January 2014, and with stocks kind of teeter-tottering and kind of hitting that high and coming off and having a little bit of resistance. And corrections are good. In healthy markets, you want corrections. You want to see selling occurring periodically, and for money to kind of wash away, and for a new foundation of buyers to come in to support higher prices. You don't want everyone to have significant gains where everyone's a happy seller at the new price, because if everyone's a happy seller and everyone starts selling, that can lead to a more significant bubble burst and cause stocks to drop very, very far. So seeing corrections throughout the year is not a problem. And I kind of anticipate that we'll be seeing some significant corrections. I mean, I wouldn't be surprised to see 10% and maybe a little more. And going forward, I mean, it would be rather healthy. I mean, going up 30% in 1 year is a little extravagant, and it's not necessarily healthy for a market to go up that much all at once. Now, I'm not saying we are going to see a significant correction. I mean, I'm saying it's possible, and especially when you consider and take everything into consideration, like the problems we have in our federal government, the budget issues, and the unsustainability of our interest rates, and the fact that we're artificially stimulating our economy with tons of QE. we are in an unstable situation, but I don't think the Federal Reserve is going to pull the plug on anything, because the stock market is kind of what they have going for them. And when stocks go up, people feel good and life goes on. People are disconnected from the fact that the government debt is out of control. They're disconnected from the fact that we have interest rates that are artificially low, and that if they go up, we're not going to be able to pay our bills. And as long as people kind of continue to go forward mindlessly, I think everything will continue to go forward. And I honestly believe that. And I say that kind of jokingly, but you got to kind of play the trade with how it's likely to go. You can just live in a box and not wanna make money in the stock market because it's a paper Ponzi scheme that the government has us in. But the reality is, it is a way to make money. And if the Federal Reserve continues to do what they do, hard assets should increase. And if you believe that a company is a hard asset and they produce income, and if inflation takes place, these companies should make more money and they'll charge more, and over time stocks will continue to go up with pro-inflationary policies. So do I think we might end up lower at the end of the year than we are now? It's possible. We might not see much gains throughout the year. If you're looking to get your money and use it in the very near future, if you're near retirement, you might consider starting to pull out some of your money and kind of trending, getting some of that money out, parking it elsewhere, maybe keeping it in cash for a short time, and then just kind of waiting for the foundation to settle again. Wait for there to be a correction and for you to feel more confident that there is a good bid support for your purchase. Now, if you are in more of my situation where you're looking more down the line, you're not necessarily looking to pull your money out now, I'm not too worried about the fluctuations in the stock market at this point. I think over time, stocks, they go up, and companies are going to continue to make more money, and especially with the way governments are their money, their loose money policies. You want to own something other than cash for the long term. You want to have something that makes money, and stocks are a good place to park your money for the long term. And when you park your money in good solid companies, you can count on them being there over the long term. And when you buy undervalued companies, you can have the upside potential even in overinflated markets, which I tend to see happening now. And the new year is kind of indicating that. We're not seeing the exuberance in the market. We are seeing kind of a hesitation in the market. And 2013, we saw more money come in that year than we've seen in the last 5 years of the market kind of going up parabolically. And it takes time for people to kind of get out of that mindset of, oh, what do I do with my money? Do I go in now? Do I go in now? Do I go in now? They have to see something go up for a significant period of time for the masses to follow. And I would venture to say that a lot of ignorant money has come in over the last year. A lot of ignorant money has, bought, and the hedge funds and all these groups that invest in the stock market that have been on the sidelines for so long are coming in, and kind of coming in a little late, if you ask me. I know if you got in at the beginning of the year, you saw that. You got to ride that 30% wave up, which was really good. Now, if you want to transition with me, I'm going to be talking about the gold sector, the junior mining sector. Now, this has been a complete opposite of what has been happening over the last 3.5 years. If you look at the charts, these stocks have been decimated over the last 3.5 years. And the people who have been buying large cap stocks have been doing well, and the people who have been buying junior mining stocks have been decimated. And then the companies themselves have been feeling it. The money is just not pouring into the sector the way these companies need it to. So the ones that aren't very strong and aren't very solid and don't have a good network in the sector are being hurt. They're being decimated. And I've seen this. I've witnessed this when I go to the San Francisco conference and the Palm Springs show, and I've heard about the shows that are going on around the country. The attendance is down, and people are they're not excited about gold stocks and silver stocks the way they used to be, because it's just a different time. But this is something else that I feel kind of changing with this new year. January has been a new year for a lot of these companies. Some of the best companies are raising money, and they're coming out, they're hitting the ground running. They're starting to advertise again, and they're starting to get optimistic about the future. And it's going to take this for this huge train to kind of shift gears and turn around. It's going to take time for people to come around, and especially for the mass dumb money, for lack of better words, to come in and buy. And I don't see the dumb money coming in for some time. It's going to take the junior mining sector going up maybe 150%, or 200% for everyone else to start coming in and getting excited about buying gold stocks again. Right now, gold stocks just have such a bad reputation, but the truth is, the value is now. The value in buying good, solid companies that have opportunities of going up 5 and 10 times and 20 times, and some are going to go up 100 times. The value and the opportunity to get those and experience that, I really feel is now, and it's going to be for some time. It's not going to just turn around right away. It's the people that are kind of ahead of the trends that are going to be able to come in and take advantage of these opportunities. It's not going to be the mainstream CNBC that's reporting Bitcoin at $1,000, reporting old news and saying, "Oh, look at Bitcoin craze." They're going to be talking about the gold and the silver sectors and the junior mining sector as a whole after it does its move. But the people who get in early and the people who find value now will be very, very happy as time goes on. And just like we've seen in the overall market, I see that happening in the junior mining sector as well. And it'll take that time, but the smart money is getting in now. And I anticipate the dumb money to follow and to make the smart money very, very wealthy. So I wanted to share that with everyone here at Crush the Street, and I'll do a little, I'm actually going to follow this up with a little bit of a write-up, and I'm going to send this out to everyone. But take the time to fill out the survey that we have. I put together a survey for everyone to be able to just kind of give us some feedback, and I want to do some interesting research. I want to put that out, and I think you guys will find it very interesting. So definitely take some time to fill out the survey that we have, that we've been running now for some time. If you do, we are going to be, incentivizing everyone by picking a random winner who will receive 20 ounces of silver mailed right to their door. A random person who fills out the survey will send them 20 ounces of silver right to their door. So definitely take the time to do this. Everyone, have a great day, and look for our weekly market wrap-up at the end of the week. And I plan on doing some more due diligence on some really exciting mining stocks. I know a lot of you guys out there I've talked to you, you're tired of getting rich slowly, and you want to speculate. You want to take some of your money and park it somewhere where there's serious value, and you have an opportunity to see, a 5-bagger, a 10-bagger, and possibly even more than that. Now, as a disclaimer, I would caution you to split up your speculations with money that you can afford to lose, not with your whole life savings. And I would split that up among a few different speculation plays. These companies are smaller, they have less amounts of money, they're still dependent on things going their way, and they're still dependent on producing the metals and selling it at a profit and running a solid business. And for those of you who are business owners out there, know that it's a challenge to run a business. And when you're dealing with a small company, you're dealing with a higher risk, higher reward payout. So be careful. Like I said, I'm going to do my part, and I'm going to do some research and do some due diligence. I got some companies on my mind, and I will be sharing with those companies with you guys in the very near future. Everyone, have a great day, and I'll talk to you guys soon.